Let's get back a little bit to some of the questions that investors have. For example, should they think of China as an emerging market investment? Should they think as a developed market investment, somewhere in between, in terms of the expected return, risk, correlation of that investment? You talked a little bit before about diversification, but what about the expected return and risk of an investment in China, and how would you structure that?
When you ask me the question of is it more like an emerging country or more like a developed country, so many different aspects of what defines an emerging country or a developed country's market vary. Okay, so they race down. What is the size of the market capitalization? What is the legal form? What are property rights? You know, just so many different dimensions. But I would make as a generalization that China is somewhere between 60 or 70% more like an emerging country, 60 or 70% more like an emerging country in those respects than it is like a fully developed country. But it has good, it doesn't have a regulatory system that is as developed as the developed countries that have been at it a while. It doesn't have some things. It has market capitalization, it has liquidity, and that's a two-edged sword. It has also greater levels of inefficiency. So the greater levels of inefficiency provide investment opportunity. So as a generalization, I would describe it that way. If I'm looking at it instead in the question of expected returns and risks, I think, as you know, I look at each market and I look at the return relative to the risk, the expected return relative to the expected risk, and the past return relative to the expected risk and what drives it. And by and large, I find developed markets and emerging markets roughly comparable, and that being able to put together portfolios of those in an effective way is the way to engineer that portfolio. So when I look at China, I think that the expected return relative to the expected risk will be equal to or perhaps higher than elsewhere, partially because of the fact that there's the diversification that you could have and put together well, but also partially because of the greater capacity of the central banks in the central bank, I should say, in being able to ease monetary policy and also run fiscal policy to be able to have higher ratio. I think that would be a plus.